Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Guotai Haitong Securities Co. Limited Annual Report. Guotai Haitong Securities Co. Limited offers a wide range of services to cater to the diverse needs of its clients. At the core of its business are wealth management, investment banking, institutional and trading, and investment management services. The company provides various brokerage services, including securities and futures brokerage, financial products, and stock pledging. In addition to these services, Guotai Haitong Securities Co. Limited offers corporate solutions such as sponsorship, equity and debt underwriting, structured debt financing, and financial advisory services, and diversified corporate solutions. It also provides research and institutional brokerage services, including prime brokers, seat leasing, custody and outsourcing, and QFII and other services. The company's trading and investment services include investment transactions in stocks, fixed income, foreign exchange, large commodities, and their derivative financial instruments. Furthermore, it offers integrated financial solutions for clients' investment, financing, and risk management. Guotai Haitong Securities Co. Limited also provides asset and fund management services to institutions and individuals. In terms of corporate services, the company offers brokerage, research, leasing, and corporate financing services. It also engages in logistics and catering management, information consulting services, real estate and property management, warehousing, investment and corporate management consulting, venture capital investment and management, industrial investment, administrative management, foreign exchange dealing, and securities trading activities. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be identified through various business segments. In this case, the securities brokerage and investment consulting business saw significant growth, with an increase of RMB 9,721,575. The underwriting and sponsorship business also experienced growth, rising by RMB 1,362,113. Additionally, the asset management and fund management business showed a substantial increase in revenue, with a total rise of RMB 2,587,311. The futures brokerage business was another key contributor to revenue growth, with an increase of RMB 52.08 million. The financial services revenue generated from HUA and funds also saw significant growth, rising by RMB 30.63 million. Furthermore, income from investment with other major related parties increased by RMB 941,770. On the other hand, some business segments experienced decline in revenue. The futures brokerage business was a notable exception, as it not only grew but also declined by RMB 3,300,090. Other areas that saw a decrease in revenue include custodian and outsourcing services, government grants, and foreign exchange losses/gains. The integration of operations following the business combination with Haitong Securities resulted in some changes to revenue growth or decline, although specific details are not provided. Overall, identifying primary drivers of revenue growth or decline requires careful analysis of various business segments and their corresponding performance. Net income experienced a significant decline of 52.1% between 2025 and 2024, indicating a challenging period for the company. However, this trend reversed as profitability improved, leading to an increase in net income. The stability of profitability was maintained with no notable changes mentioned. Profit margins also underwent fluctuations. Initially, there was no direct information provided for 2025. Nevertheless, they strengthened due to accelerated business expansion and innovation. Despite remaining stable at some points, profit margins ultimately improved due to increased investment in hard technology and enhanced green finance service capabilities. However, a slight decrease from 34.88% to 34.26% was observed, indicating a minor decline in profitability. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. A review of the operating cash flow reveals that it has turned positive, standing at $832,338,763. This is a crucial milestone for any business, as it signifies that the company is now generating sufficient funds to cover its operational expenses and invest in growth initiatives. The positive operating cash flow is a testament to the company's efficient management of its resources and effective implementation of cost-saving measures. It also suggests that the company has been able to manage its working capital more effectively, resulting in improved liquidity and reduced financial risk. Overall, this development bodes well for the company's future prospects and provides a solid foundation for further growth and expansion. The company's debt level has experienced significant changes over the past year. According to the extracted summaries, total borrowings and debt financing increased from RMB 191.225 billion in 2024 to RMB 486.633 billion in 2025, a substantial increase of RMB 295.408 billion. Additionally, non-current liabilities, including loans and borrowings, bonds payable, and other financial liabilities, have also seen significant increases. In terms of interest expenses, the company has experienced varying changes over the past year. While some summaries indicate an increase in interest expenses, such as a 66.92% rise from RMB 12,707,342 to RMB 21,210,969, others suggest a decrease or no significant change. However, it is worth noting that one summary mentions a total interest expense decrease of RMB 31,872,331 from 2024 to 2025. Overall, the company's debt level has increased significantly, while its interest expenses have experienced mixed changes over the past year. The company's performance was mixed across various segments and regions. On the positive side, domestic operations and overseas operations showed significant growth, with the latter experiencing an accelerated enhancement of its international footprint. The digital platforms, including Zhenheng App, Daya, and Zhijian, also performed well. In addition, specific business areas such as investment banking in Hong Kong, Chinese offshore bond underwriting, refinancing, small and medium-sized institutions in niche segments, foreign institutions expanding domestic operations, and top securities companies demonstrated strong performance. However, there were some areas that struggled. The wealth management business, investment banking business, institution and transaction business, investment management business, and finance lease business did not provide any performance information, suggesting a lack of growth or significant challenges. Furthermore, small and medium-sized securities companies without comprehensive strength also underperformed. Overall, the company's diversified portfolio helped to mitigate some of these weaknesses, but there are still areas that require attention and improvement. Management is emphasizing the company's commitment to serving national strategies and supporting the real economy. The 15th five-year plan period will be critical for advancing Chinese-style modernization, with a new 3-year strategic plan formulated to achieve development goals. The company aims to drive innovation and growth through financial technology, while prioritizing green finance, inclusive finance, and digital finance. A comprehensive customer service system is being established across retail, institutional, and corporate segments, generating fee and commission income through financial products and services. Management is focused on increasing equity fund scale, strengthening core investment research capabilities, and enhancing investment experience for fund holders. The company will prioritize high-quality development of public funds in 2026, building differentiated competitive advantages and improving core investment research and value creation capabilities. The company's economy has shown strong resilience despite global challenges, with a commitment to prudent operations and enhanced risk management systems. Management is actively integrating into the national strategy for rural revitalization through establishing a paired assistance mechanism between state-owned enterprises and counties. Overall, the company outlook emphasizes innovation, growth, and strategic alignment with national goals, while prioritizing financial inclusion, green finance, and digital transformation. The company has made several strategic moves in terms of acquisitions and divestitures. In the realm of acquisitions, the company merged with Haitong Securities through absorption of non-current assets. This move likely aimed to expand the company's capabilities and resources. Additionally, the company increased its non-trading equity investments, which are valued at fair value through other comprehensive income. This suggests a strategic investment in other companies or entities that align with the company's goals. On the divestiture side, the company has deregistered 35 branches, including 33 regular branches and 2 securities business branches. This move likely aimed to streamline operations and reduce costs by eliminating underperforming or redundant branches. The company has a history of distributing wealth to its shareholders through both dividends and share buybacks. In terms of dividends, the total amount distributed was RM 8,756,811,414, with an annual dividend payout of RM 8.8 billion. This indicates that the company prioritizes returning value to its investors. In addition to paying out dividends, the company has also engaged in share buyback activities. Specifically, it repurchased shares through centralized bidding transactions from April to July 2025, totaling 67,516,831 shares. The total amount spent on these purchases was RM 210,734,497, excluding transaction fees. This demonstrates the company's commitment to reducing its outstanding share count and potentially increasing earnings per share for existing shareholders. That concludes the financial summary for Guotai Haitong Securities Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.